today we are tackling something that no one really loves, but everyone has to face: tax season. I know, just hearing the word taxes can make you want to snooze, but stick with me for the next few minutes because I am going to show you how to take the stress out of it. This year, you're not going to wait till the last minute. You're not going to scramble to find forms or receipts. Nope, you are going to be the most prepared you have ever been for tax season. And guess what? It's going to feel amazing to check that box and move on with your life. In today's episode, I am giving you the ultimate guide for preparing for tax season 2025. We will cover everything you need to know: deadlines, deductions, credits, and even some big changes coming the IRS doesn't want you to miss. Plus, I've got a few tips to help you maximize your refund, or at least minimize what you owe. So let's make this tax season the easiest one yet. Ready? Let's dive in.
Welcome to the Financial Mirror, where future success is reflected in our knowledge of fixing the one thing we can control: ourselves.
Welcome to the Financial Mirror, and thanks for joining me today as we continue to work to improve the one thing that we can control: ourselves. Here at the Financial Mirror, it is not about the numbers and spreadsheets alone, but about transforming and educating you on money so that you can make smarter financial decisions. If this is the first time you're joining in, don't forget to hit subscribe on YouTube to be notified of all the new episodes as they release. If you're listening to this on Rumble, don't forget to follow the channel and like the video. And on any podcast platform of your choice, don't forget to like and subscribe to the podcast. So today we are talking about taxes. I'm not here to bore you with tax things because taxes are already boring. What I want to do is give you some down and dirty, straight to the point things that you can do to prepare yourself for tax season this year. I've got a lot of the major things that apply to most and wanted to show you those so that you know they're there. As you're working through taxes, you can be on the lookout for them and you can prep. You can prep because we are coming up on the start of 2025 tax season where you're filing for the last 365 days of work. And I want you to be ready for it. I want you to knock it out, get it over with, and not be one of those last minute folks that are quickly trying to pull all this together and file their taxes. More importantly, tax professionals, if you're going with one of them, only have so many hours in a day. And there are tons of people that need their taxes done. Right? Look to your left and your right, and those people need their taxes done. They are going to the same tax professionals as you. So what I'm challenging you to do is to prepare now and get ready so that you can make this a seamless and smooth tax season this year. So first things first, let's talk deadlines because this is crucial. So tax day this year is going to be on April the 15th. So all of your taxes must be filed ahead of April the 15th, which is the federal deadline. Okay. So tax day is April 15th, 2025. That is the date that you need to have your taxes filed and payments you owe submitted for 2024. Okay. That's right. Yep. So payments have to be made by 2024. Now, if you're thinking, I'm going to need more time, don't worry. You can file for an extension, which will push you to a deadline of October the 15th, 2025. But here's the catch. While the extension does give you more time to finish the paperwork part, the actual filing part, any taxes you owe are still due by April 15th. So make sure you're planning ahead to avoid those penalties. Okay. That is a big thing. You've got to be able to pay your taxes by that April 15th deadline. So tax tip here, pay by the April 15th deadline to avoid penalties. That is important. That is crucial. And many people miss it. They do. Many people miss it. So that's kind of the first piece that we want to look at. We want to talk about that you need to know the deadline. I believe last year it was April the 18th. It always kind of falls in that window. But this year, April the 15th, 2025 will be the tax deadline. So make sure you're working on that so that you can avoid penalties. Now, the next thing, let's move on to when do you actually start being able to file your taxes? Well, right here at the top of my screen, if you're on audio, that's okay. I'm going to read it to you. January 27th is the start to 2025 tax filing season. It typically begins around the end of January, and this year is no different. You can start with Direct File. Direct File is available starting January the 27th, and by then you should have all of your necessary forms starting to arrive in the mail, or more likely these days in your inbox, right? More people are just getting them like e-delivery and you're getting them through your email. But that's what you should be starting to do. And I've got a checklist at the end I'm going to link to in the show notes here as well, just so that you can start prepping these documents. Some of them you can do without needing to wait for a business or company or someone to send you a tax form. Some of these you can start doing now, okay? Very important. There's certain things out there that you do have to wait for, like some of the most common are like W-2 forms from your employer. Very common forms that you will receive from everyone that you were employed by. If you did some freelancing or side gig work, contracting work, things of that nature, you may be getting some 1099 forms. If you had investments, you probably are getting some 1099 forms. If you had dividends, that you got paid out by banks or investments, you're going to get 1099 forms. You're going to get mortgage interest statements from any mortgages that you have. You're going to have those charitable contribution records from places that you donated money. All of these things are forms that you're going to start receiving, and if you'll stay on top of it, it's really not that bad. Okay. It's really not that bad. The thing is if you're not going to itemize your deductions and just take the standard deduction, which we're going to talk about momentarily, if you're just going to take the standard deduction, there's less you need to worry about getting, right? There's less you need to worry about getting, but that doesn't mean that there's nothing you need to worry about getting. Okay? Be on the lookout for those W-2 forms. That's something you need to collect on. The biggest ones that I tell people when it comes to W-2s is people that had maybe multiple employers in the year. Think through some of those old employers, and is your address correct on file? Do they have the correct email address to email you your W-2? A lot of those companies will mail those out because you didn't provide them an email address when you left. Probably you just had the last known physical address on file, and that's where they're sending it. So getting in touch with all those old employers is very important because you need those W-2s to get started. Otherwise, look for any type of freelance side gig work. Look for those 1099s as other forms of income, just so you can show that, okay? Now, if you do plan to itemize your deductions, now is the time to start gathering receipts and things like medical expenses, donations, business expenses, all of those items, because you don't want to wait until April to start scrambling through old emails, shoeboxes full of receipts, all of those things, and try to pull all this together. Your tax professional is going to ask for it. If you're doing these and filing on your own through some software online, they're going to ask for it. So trust me, you will thank yourself later if you will start pulling these items together today. So tip 2, create a tax folder. Create a tax folder and start to put these items in there. It can be online, it can be physical in some binder or folder, a manila folder, something like that. But you need to create a tax folder to start putting these documents in, storing these to be ready for as all of your forms start to filter in, you have them. Okay, so that's the first 2 things. Number 1, know your deadlines. Know when you can start and know when that deadline is. That April 15th deadline. Start filing begins on January 27th with the direct file. Know what forms you need to be looking for initially from those that you need to be receiving, and start reaching out and making the appropriate changes so you can make sure that you're getting those W-2s and 1099s on time. Okay. So that number 3 thing that we need to focus on is understanding tax brackets. Let's break down tax brackets. It's not as straightforward as many people think, but these tax brackets have been adjusted slightly for those for individuals they give you a little bit more breathing room before you hit the next tax bracket when you think back to comparing to last year. So here is this year's tax brackets. 10% income up to $11,600 for single filers, $23,000 for married couples filing jointly, 12% for the $11,000 to $47,000 or up to $94,000 for joint filers, and 22% for $47,000 to $100,000 or $94,000 to $201,000 for joint filers. But just take a peek at this. This is a chart of all of the tax brackets that we have going on. Now, here's the thing to remember about tax brackets. And this is where many people are kind of misled on tax brackets. It's not like your entire income is taxed at one rate. Okay. You look at this and people are like, oh, well, I'm single and I make $95,000 a year. So I'm in the 22% bracket. Sure. You are in the 22% bracket. However, it's not like your entire $95,000 is taxed at 22%. The IRS uses a progressive tax system, which means different portions of your income are taxed at different rates. So if you're in the 22 bracket and you make $95,000 a year, part of your income is taxed at the 10% rate. Part of your tax is taxed at the 12% rate. Part of your tax at the 22% rate for that remainder, right? That's how this works. It is a progressive taxing. It is not a entire income taxed at one rate. And that is commonly overlooked. Okay. Very, very common for that to be overlooked when you're thinking through this. Now, these are good to know. You're not going to really change them. However, if you can adjust how much, like what your range is right here through credits. So we're going to talk through that. But just keep these in mind. These are really good when you're thinking through where you stand in terms of your filing, but you're not really changing them, right? Just gives you an idea of how much that income you're paying into your federal income tax. Now, you are also potentially paying state income tax as well. Those rates vary by state, so I'm not going to go into those because some states don't have income tax and others have a flat rate. Others have progressive tax systems. So if you see your state has no income tax, well, congratulations, you don't pay a state income tax. If you see that your state has a flat tax, then you pay your entire income is taxed at that flat rate. And if you see that your state is on a bracketing system like this, it's probably a progressive system, and it probably does the exact same thing that the federal does. So just keep these in mind. So that's number 3, is just understanding your tax bracket. Number 4 that I wanted to cover is standard deductions. Standard deduction has gone up for this filing year. Here are kind of those new numbers. And it's $14,600 for single filers, $29,200 for married filing jointly. Okay. So that is, and $21,900 for head of household. So the standard deduction is a flat amount that reduces your taxable income, right? If your itemized deductions for things like the mortgage interest, the medical expenses, your donations, all of those things, if they don't add up to more than the standard deduction, you're probably just going to go with the standard deduction. A, it's easier, right? Because you don't have to pull all the receipts together. And B, it gives you more, it reduces your taxable income by more. If you only have $14,550 in itemized deductions and you're single, taking a standard deduction gives you $500 more off of your taxable income. Why itemize? Like that wouldn't be smart, right? You pay for $500, you pay taxes on $500 you didn't have to. Okay. So that's how standard deductions work. This is what your standard deduction would be. And it's very important for you to know that because it determines where you're going, how you're going to file, which one you're going to use. Okay. So very important. Now, let's get to the part that everyone loves. I don't know. I kind of like standard deductions in a way. If a lot of people do try to itemize. They just don't always get there. But I think it's always kind of cool to, even if you don't, it's always, fun to me to go through the exercise of seeing if you have enough deductions and thinking through where you're spending money throughout the year. But anyways, maybe I'm the weirdo, but if you do itemize deductions, just one thing before we kind of get off of this whole deduction thing. If you do think you have enough qualifying expenses for itemization throughout the year, I challenge you, starting back January the 1st, if you can, if you use an online budgeting platform, every time you spend something that qualifies as an itemized or a deduction for your taxes, label it, mark it. All budgeting software have some way to mark something as taxable or label it as taxes or something and track those transactions. It makes it so easy at the end of the year to export that label. Every transaction that has that label or every transaction you mark taxable, you can give that to your tax professional and they can help you if you keep a good note of what it was that you spent that on, right? Because if it says, Walmart and you bought like medical supplies because you had a broken arm or something, you needed a sling, then it needs to know that was a sling and not groceries at Walmart, right? Or not a video game or not a computer printer or something like that, right? Like it needs to know what this is, and you need to keep track of that information. But it's just a really good way to maintain some type of record of those, so you can just export them within the year. So enough on that. Let's get to the part about tax deductions and credits and a couple of little ways that you can save money. So first off, people say deductions and credits, and they kind of use them interchangeably sometimes, and they are different. So a deduction lowers your taxable income, which means you're taxed on less money, right? It means you're taxed on less money. So if you make $95,000 and you have a $5,000 deduction, you're taxed on $90,000, right? You're taxed on $90,000. Now, a tax credit means that it reduces your tax bill directly, okay? Meaning you could get a check from the IRS even if your tax bill is already at zero, right? If your tax bill is zero and you get a credit, they now owe you money, right? So a tax credit has a direct impact on your tax bill, okay? Tax deduction, it lowers the amount of taxable income. So here are some popular deductions and credits that you will want to consider when thinking through taxes this year. And I'm going to hit the four biggest deductions and credit, or combination deductions and credit, 2 deductions, 2 credits that impact most people. So the first one is charitable donations. This is a pretty big one that it's kind of easy to contribute to. You can deduct donations made to qualified organizations up to around 60% of your adjusted gross income, your AGI, and it's pretty easy to donate to and add all to get deductions for charitable contributions. Okay, and I say that because there are types of organizations that qualify as a charity or someone that can receive a charitable contribution. But man, it is pretty vast. And like, if you believe in something, there's a good chance you can go and find a charity that contributes to help grow or broaden or provide funding to that thing you care a lot about. And man, it's pretty vast. So if you want to reduce some of your income, some of your taxable income, charitable donations is a great way to do it. Okay. A very, very, very good way. And you can knock down about up to 60% of your adjusted gross income. You can deduct donations made to qualified organizations. So I'm going to link to all of these in the show notes. So if you want to read more about these, what's defined as qualified organizations, things like that, just look through these articles. Now, the second deduction that I wanted to look at is the medical deductions, right? Medical deductions. So these are, you can expense, they're deductions that are made for, if you had high medical expenses, you can deduct anything above 7.5% of your AGI. So generally, you can deduct on a Schedule A Form 1040 only amount of your medical and dental expenses that is more than 7.5% of your AGI. So this is a good little website. Goes through examples, things like that. And all of these are from the IRS website directly. These are not. There's one that I have that's not directly, but it had a better presentation. It's highly. So it's something that you want to know about. Okay, or it applies to a lot of people. So, anyways, medical deductions. If you had high medical expenses, it's just a great way to knock down that taxable income. So I'll link this one so that you have it. The next one is the earned income tax credit. So this is a refundable credit for low and middle income earners. For 2024, you could qualify for up to $7,830 depending on your income and family size. So here's the table for who would qualify. So the maximum adjusted gross income, investment income, and credit amounts for tax year 2025, meaning you cannot make more than these numbers, right? Number does go up as you have children or relatives that you're claiming, but this just gives you a tax credit depending on your situation, right? If you are kind of a low or middle income earner, there's some money that you can get back, or there's some reduce your tax bill for if whatever situation you fall into on this table. So just something you should look into if you fall into one of these annual salary amounts. Just please talk to your tax professional. Look for EITC, Earned Income Tax Credit. Be on the lookout for that so you know that you qualify for this, okay? And then the next one is the child tax credit. So you can claim up to about, I think, like $2,000 a child. But here's what it takes to be a qualifying child. And just know that this is a tax credit, so it reduces your tax bill, okay? But that's the biggest four things that most people have applicable to their lives, right? Most people have, at least the opportunity to do charitable deductions, medical deductions. Potentially you fall into the earned income tax credit buckets, and child tax credit if you do have a child that's under 17 at the end of the tax year, right? So that is what you are looking for. Now, that is a lot of information, I know, and I tried to bust through it as fast as I can because I don't want to bore you. I want to show you the things to be on the lookout for. So when you start going through this cycle of tax season, you just knock it out. Now, there is one more thing that I wanted to show you because it is, as I stated, probably one of the most, one of the greater changes that happened this tax season. They've talked about it before, but this time it's real. So this is an attention call for freelancers, side hustlers, and anyone selling goods or services online. Okay, so starting with taxes this year, if you earn more than $5,000 through a platform like Venmo or PayPal or Cash App, you will receive a 1099-K form, right? 1099-K form will be received. This is a big change from the previous $20,000 threshold. So make sure you're tracking all those payments carefully to avoid surprises. This was a big change, right? If the total transactions amount to $5,000 or more, IRS rules dictate that the vendor must send you and the IRS a 1099-K. So the IRS is going to receive it just like you are. This is a big difference from the $20,000 and 200 transactions threshold that existed before. So you've always been required to pay taxes on this. That part isn't new. The difference is I guess it wasn't as strict, right? Because you would, if you didn't have the 1099-K, it was kind of going off of like, Good Samaritan rules. We hope you told us everything. But now you will receive a form and they will too. So you've got to be on the lookout for those. You've got to be thinking about this, how this is going to impact you. Because not reporting 1099 income can create a red flag for an IRS audit. So if this gets sent to the IRS and you don't report it, there's a good chance that this will get you an audit this year, right? This is a big deal, and I just want you to be aware of it, okay? So I'm going to put a link to that. If you want to read more about it, just check out the show notes. But this is a much bigger thing than a lot of the other changes are just small tweaks in credit, standard deduction amounts and tax brackets and things like that. But that 1099-K piece is big because a lot of people have started selling things online. A lot of people have picked up little side gigs, freelance work that they're picking up and doing for additional income. So I'm just telling you, be on the lookout for that. And that all is taxed at your normal standard income tax rates. Okay. So now you know what to expect. Let's talk about how to file. If your tax situation is simple, you can use a software like Ramsey Smart Tax, TurboTax, H&R Block. Even the IRS has a free file option. But I'm telling you, if you've got a more complicated situation, like you're running a business or you're dealing with a lot of deductions, you might want to hire a tax professional. They'll make sure you get every credit and deduction you qualify for. Okay. Very, very important. Now, what they're going to be looking for when you reach out to them is all of those documents. So I'm going to share this little checklist right here that talks about what documents you need to file, and whether you hire a professional or you do it yourself, this will still be helpful. But if you're going to hire a professional, you will want all of these things: last year's taxes, Social Security and tax ID numbers, the IP PIN. If you're issued one of these, you can also go get one, but it's an identity protection pin. You get issued that by the IRS. Those are fairly new, and you'll need that handy whenever you start to file. But bank account numbers, W-2 forms, all those 1099s of all types, deductions, credits, all of those things. You will want to have all of these together before you go to your tax professional. Okay, so that is what you will want to look at, and I'll share that in the show notes. So don't you worry. Now, you now have your guide. You have everything you need to go and be prepared for tax season 2025. Remember, you've got to stay organized. You've got to keep track of those deadlines, and do not miss out on any deductions and credits that can save you money. It's your money, and if you qualify for it legally, you should get the credit and get the deduction. If you have questions, drop them in the comments below. I'd love to help. I do want to give one disclaimer. I am not a tax professional. I'm not here. I haven't told you anything about how to file your taxes and how many exemptions to do and all. I haven't told you that. All I'm telling you is go talk to a tax professional about your situation. But these are just standard things that if you will pull these together with just a few little tips that I gave today, you will be ready. Okay. You will be ready. Now, if you enjoyed the episode, if you got something out of this, if this motivated you to go and get ready for tax season, don't forget to like and subscribe and share this episode with someone else who could use a little tax season clarity. So I appreciate you watching. Appreciate you listening for those on the podcast. And here's to a stress-free tax season. Thank you for watching. Until next week, continue improving the one thing you can control yourself. Peace.
Well, that wraps up today's Financial Mirror. Join us next week as we continue to work on ourselves, change our mentality, and to commit to achieving the success we always envisioned. Regardless of your platform, help us grow as a community. Please like, subscribe, and share with the people in your lives.